all the trial balance item will consider once. Either it will come in the trading account or in profit and loss account or in balance sheet. All the additional information items you need to treat twice in the final accounts, that's trading account or profit and loss account or in balance sheet. Purchase is also called as return outwards. Hello everyone, I am Meghna from the Department of Commerce, lecturing in Vidhyaashram First Grade College, the Temple of Excellence. We are in the session 10 of Unit 1, subject Accounting. In the last class, we have discussed introduction about final accounts of a sole trader and meaning of final accounts and profit and loss account, trading account, and we just know the format of all the trading, profit and balance sheet. So let's continue with the same topic but the problems on final accounts of a sole trader. In the last session, we just know the meaning, then format of final accounts, all the three, trading and profit and loss account and balance sheet. In today's session, let's start with the problems. Let's start with the first problem. From the following trial balance, prepare trading and profit and loss account for the year ended 31st March 2012 and the balance sheet as on that date. That means from the following trial balance. Trial balance means the ledger balance. Trial balance is a worksheet. Will record all the ledger account balance in the debit and credit side. Trial balance should be matched. All the debit and credit should be matched. So, just look at the problem. This is the trial balance. Purchase debit side 21,750. Discount allowed 1,300. Wages 6,500. Salaries 2,000. Sales 35,000. Traveling expenses 400, commission 425, carriage inward 275, administration expense 105, trade expense 600, then interest 250, building 5000, furniture 200, debtors 4250, capital 13,000, creditors 2,100, cash 7,045. Trading trial balance. The debit and credit should be balanced. So, we'll get 50,100 and 50,100. So, the trial balance is correct. Just continue with the problem. Additional information. This is the trial balance information. In addition with this trial balance, we have some more information. Stock on 31st March 2012. 31st March means closing stock. Closing stock rupees 6,000. Closing stock 6,000. Then depreciate building by 20%. Depreciation for the building 20,000. Create provision for bad debts 10% on debtors. That means provision for bad debts 10% on debtors. Then outstanding wages 475. Difference between trial balance and the additional information is all the trial balance item will consider once. Either it will come in the trading account or in profit and loss account or in balance sheet. All the trial balance item you will treat only once in all these final accounts. So, either it may come in trading or profit and loss account or in balance sheet. But additional information or the adjustment item, these four items you will consider twice. That means closing account you will consider twice. Again depreciation 2 times. And provision for bad debts 2 times, outstanding wages 2 times. All the additional information items you need to treat twice in the final accounts, that's trading account or profit and loss account or in balance sheet. So, in the last class, we learned the format of trading account, profit and loss account and balance sheet. In trading account, we will consider all the direct income and direct expenses. That means the trading activity, buying and selling activity. The entry which is related to direct expenses and income and the trading activity. First, you need to identify what all are the items comes under trading account and what all are the items comes under profit and loss account and the balance sheet. First, you need to classify the items. Before starting into problem, just identify the items. Purchase, buying and selling activity. So, It comes in trading account. Purchase comes in trading account. Then discount allowed. Discount allowed is a indirect expenses. You are giving discount. It's an indirect expense. So it is profit and loss account. Then wages. Wages, trading account. Direct expense, trading account. Then salary, indirect expense, profit and loss account. Then sales. Sales is buying and selling activity, trading account. Then traveling expenses, indirect expenses, profit and loss account. Commission. Here commission, they are not mentioned either commission received or commission paid. So first you need to know whether it is commission received or paid. So this is the debit item. Debit item means expenses. So it is commission paid. Commission paid. Commission paid is an indirect expense. So this is profit and loss account. Then carriage inward. Carriage inward is trading account. It is a direct expense. In the last class, in the pro forma of trading account, it includes carriage inwards. If you have learned the trading account format in the last class, then you'll know carriage inward is trading account. Then administration expense. Administration expense is an indirect expense. So profit and loss account. Then trade expense, profit and loss account. Here same way interest. They have not mentioned either interest received or interest paid. So this is the debit balance, all the expenses. So it is interest paid. Interest paid is a indirect expense, P&L account. Then building. Building is asset. So balance sheet. B means balance sheet. A means asset. Asset, balance sheet. Furniture. Furniture is also asset. Comes in balance sheet. Debtors. Debtors is also a balance sheet. Then capital. Capital is a liability. Liability in balance sheet. Then creditors. Creditor also balance sheet. Cash, balance sheet. First, you need to classify between the trading account, profit and loss account and balance sheet. So, trial balance over. Then additional information. This is the closing stock. All the additional information you need to treat twice. So, closing stock in the pro forma of trading account, will consider closing stock in the credit side. That means sales less sales return, then closing stock. So, closing stock comes under trading account, credit side. Again, balance sheet. Balance sheet, asset side. Closing stock is a asset. So, balance sheet, asset side. Trading account, credit side, balance sheet, asset side. So, you need to treat twice. Then, depreciate building by 20%. So, depreciation is a expense, indirect expense. So, once you will consider in the profit and loss account, debit side. For the calculation, 20%. 20% means consider building amount. 5,000 is a building amount. 5,000 into 20%. 5,000 into 20% amount. The amount in the profit and loss account debit side. Once you will treat in the debit side of profit and loss account. Again in the balance sheet asset side. From the building you will deduct this 5,000 into 20%. The amount what you will get after calculating 5,000 into 20%, that you will deduct from 5,000 of building amount. So, I will consider profit and loss account and balance sheet in the asset side. Next, create provision for the bad debts 10%. The same way, provision for bad debts is an indirect expense. Once you will consider in the profit and loss account debit side. For the calculation, 10% on debtors. So, you will consider the debtors amount 4,250. 4,250 into 10%. That is 425 rupees. Once you will consider profit and loss account debit side. Again in the balance sheet asset side. From the debtor you will deduct 425 rupees. So, you will consider profit and loss account and balance sheet. Next, outstanding wages. Outstanding wages means wages occurred but not yet paid. So outstanding expenses. Outstanding wages is a outstanding expenses. Wages occurred but not yet paid. So wages is a trading account item. Trial balance, we have wages rupees 6,500. So 6,500 we will consider in the trading account. So outstanding wages, trading account debit side, you will add with 6,500, that is 475 rupees. Again in the balance sheet, liability side, that means outstanding wages. Wages occurred but not yet paid. You are going to pay in future. So this wages, you have a liability to pay in future. So outstanding expenses, you will consider in the balance sheet liability side. So now we have classified trial balance and the additional information where you need to treat in the trading account and profit and loss account. We classify all the information. So let's start with solution. This is the format of trading and profit and loss account. Trading and profit and loss account, two separate statements. We'll do it in a single statement, profit trading account and profit and loss account. After finishing trading account, we'll continue with the profit and loss account. First, we'll consider only trading account. First, write heading trading and profit and loss account for the year ended 31st March 2012. Here, 31st March 2012 for the year ended 31st March 2012. Balance sheet is on the same date. That means for the balance sheet also same date, 31st March 2012. Trading and profit and loss account for the year ended 31st March 2012. Debit and credit. Particulars, amount, inner column for the calculation. Then again amount, particular, amount and amount. Here this side you will consider all the direct expenses and here all the direct income or trading activity. Trading account you will consider. For the calculation of gross profit or gross loss, you will consider all the trading activity. So find trading accounts in the trial balance. We have one trading account. Purchase. Purchase is a direct expenses. First, before writing purchase, we need to write opening balance. In the pro forma, first we will write to opening stock, then purchase less purchase return, then direct expenses. First identify opening stock. So in this problem, we don't have opening stock. So just leave the opening stock, then start with purchase. Right? To purchase 21,750. To purchase 21,750. We don't have any adjustment related to purchase. That means any purchase return. We don't have purchase return here. So write directly in the outer column 21,750. Next, purchase. Just make a mark so it is clear that we consider purchase. Then find trading account. Again we have wages. Any adjustment related to wages. In the same way, while writing every transaction, first you need to know whether you have any adjustment related to that. That means for purchase, you need to find any purchase return. Purchase is also called as return outwards. So find any return outwards or purchase return. So here we don't have any purchase return or return outwards. So purchase amount directly we will write in the outer column. Then wages. We have wages 6,500. Any adjustment related to wages. Here we have wages. So trading account you need to consider in trading account. Outstanding wages 475. So first wages, to wages. To wages. Amount rupees 6,500. Amount rupees 6,500. Then we have outstanding wages. Outstanding wages you need to add with wages. Outstanding wages. Outstanding wages rupees 475. Just make a total 6,975. So we finished one entry for wages. Again, this wages will record. Then sales. Sales is direct income. So purchase is debit side, sales in credit side. So write sales in the trading account credit side 35,000. Before writing sales, just verify you have any sales return or return inwards. So here in this problem, you don't have any sales return or return inwards. So write sales and amount directly in the outer column. Sales 35,000. While writing in the credit side, start with by sales 35,000. Sales 35,000 finished. Then carriage inward. Carriage inward is a direct expense. Just write in the debit side of the trading account carriage inward 275. Carriage inward 275. 2 carriage inward rupees 275. Next, any trading, here you have one trading entry, that is closing stock. Closing stock, trading account credit side. So write closing stock rupees 6,000. By closing stock, by closing stock rupees 6,000. So now we finished all the trading account. So make a total, write whichever is higher. So credit side will get 41,000 and the total of debit is less than the credit. That means income is more than expense. The total of credit is 41,000. Write 41,000. Both the side 41,000. Then the difference is considered as gross profit. To gross profit. Because income is more than expense. Gross profit carried down for the profit and loss account. Now find the difference between the debit and credit. 41,000 minus 21,750, 69,075 and 275. The difference is 12,000. So 12,000 is a gross profit. Gross profit from the trading account is 12,000. This carry down should be brought down for the profit and loss account. So I will continue profit and loss account in the same statement. So this carry down should be brought down for the credit side. Right? By balance brought down rupees 12,000. Or you can write gross profit. By gross profit brought down rupees 12,000. So we finished with trading account. Now consider all the profit and loss account. So here we have profit and loss account. Discount allowed. Discount allowed is a expense. So write in the debit side discount allowed rupees 1,300. To discount allowed rupees 1,300. Discount allowed. Then again salary. Salary is an expense. So write in the debit side salaries 2,000. To salaries 2,000. We don't have any adjustment related to salary or discount allowed. If you have any outstanding salary, you need to add with salary. So in this problem, you don't have any adjustment. So write 2000 directly in the outer column. Salary. Then traveling expenses. So write in the debit side, traveling expense 400. To traveling expenses 400. So next, commission paid. Commission paid is a expense. Debit side, commission paid 425. To commission paid to commission paid 425. Next, administration expenses 105. Expense, debit side, administration expense administration expense 105. Next, trade expense. Expense, debit side 600. To trade expense. To trade expense rupees 600. Next, interest paid. Interest paid 250. To interest paid 250. Next, balance sheet, balance sheet, balance sheet. So all the profit and loss account you'll consider. Just look at additional information. If you have any profit and loss account, here you have depreciation, depreciate building 20%, depreciate building by 20%. So depreciation on building 5000 into 20%. To depreciation on building 5000 into 20 by 100. 5000 into 20 by 100. This 1000. Then again we have create provision for bad debts 10% on debtors. Provision for bad debts 4250 into 10% 425. So write provision for bad debts 425. Provision for bad debts 4250 into 10%, that is 425. So I'll consider all the trading and profit and loss account. Record outstanding wages also. Now make a total. Make a total 12,000, 1,300, 2,400, 425, 105, 600, 250, 1,425. In the credit side we have 12,000. So credit is more than debit side. That is income is more than expense. So 12,000, write 12,000 both the side, 12,000 and 12,000. Then find the difference. The difference is considered as net profit. Net profit carry down for the balance sheet. Transfer to balance sheet. Net profit transfer to balance sheet. Now find the difference between the debit and credit side of profit and loss account. Net profit is 5,495. 5,495 is your net profit. It should be transferred to balance sheet. So this is trading and profit and loss account. So let's continue with balance sheet. This is the format of balance sheet. Balance sheet for the year ended 31st March 2012. Assets and liability. Trading, profit and loss account, trading, P&L, trading, P&L, P&L, trading. Again, find the assets or liability, that is balance sheet. Building rupees 5,000. Building is an asset. So write in the asset side, but you have adjustment related to building, that is depreciation 20%. The building amount 5,000 in inner column. Building 5,000. Building 5,000 less depreciation less depreciation 1,000, amount in the outer column 4,000. To see here, depreciation on building is 1,000. So now depreciation once in P&L account and balance sheet we have treat twice. So this depreciation adjustment is over. Next, here we'll consider building. Then furniture. Furniture we don't have any adjustment. So furniture 200 directly write in the outer column. Furniture is assets. Balance sheet, asset side. Furniture 200. Then debtors. Debtors 4,250, but we have adjustment, that is create provision for bad debts 10%, that is 425. So write in the inner column debtors 4,250, then deduct provision for bad debts 425, deduct 425, 3,825. So now we consider trading and balance sheet. So bad debts, provision for bad debt adjustment is over. Next, capital. Capital 13,000. Capital is liability. So write in the liability side capital. In the pro forma, we'll write capital amount in inner column and you need to deduct net loss, or if it is profit, add with capital, then deduct drawings, then income tax. So write here we have net profit. So it should be transfer for the balance sheet and add with capital. And net profit transferred from profit and loss account rupees 5,495. 5,495. 18,495. Then find if you have any drawings or income tax. In this problem you don't have any drawings. So write directly in the outer column 18,495. Directly in the outer column 18,495. Capital finished, then debtor aitu. Then creditors. Creditors rupees 2,100. Creditor liability. Right, creditors 2,100. Then cash. Cash is assets. So asset side 7,045. Cash 7,045. Here we have closing stock, balance sheet, asset side. Closing stock rupees 6,000. closing stock 6,000. So closing stock, trading account and balance sheet. So closing stock adjustment finished. Then we have outstanding wages. We'll consider trading account and we need to consider in balance sheet liability side. So write outstanding wages, liability side 475. Outstanding wages 475, liability side. So we'll consider outstanding wages is also considered twice. So just to verify whether you have considered all the transaction or not. Cash. So we finished all the transaction and adjustment. So now make a total. If it is tallied, then it is correct. Make a total both the side assets and liability. The total of liability is 21,070 and the total of asset is also 21,070. So our balance sheet is tallied. So your problem is correct. So this all about first problem on final accounts of a sole trading concern or sole trader. This is all about today's session. Let us continue with the next session. One more problem on final accounts of a sole trader. Until then, keep watching. Thank you.